Hi everyone, very good evening and welcome back to Crack Grade B. So let's start today's session. We are going to be talking about the assets and liabilities, right? So the discussion will start from yesterday's discussion. Very good evening everyone. I hope there is some issue with the camera. Good evening everyone. स्क्रीन विजिबल है ना सभी को? Yeah, that's what. I guess it is clear now. Camera lens is perfect, but I do not know why it is having the issue right now. I guess now it is perfect. Now it is perfect. Let's start. So we were talking about the classification of assets, right? So yesterday we discussed about the types of assets. No, this is having some issue. Wait, let's fix it. Now it's perfect. ओके चलिए अब स्टार्ट करते हैं. सो वी टॉक्ड अबाउट बेस्ड ऑन द फिजिकल एग्जिस्टेंस एंड नाउ टुडे वील बी टॉकिंग अबाउट द क्लासिफिकेशन ऑफ असेट बेस्ड ऑन यूसेज, राइट? So based on usage, the asset can be classified based on two types, that is operating and non-operating, right? Please remember this type of classification, but because cash flow is in your course, fine, cash flow has been introduced in your course, and when we'll be reading about cash flow, it is very important for us to know what assets are operating assets and what kind of assets are non-operating assets. ठीक है? So let's talk about it. First of all, operating assets. Operating assets are those assets that are required in the daily operation of a business. In other words, operating assets are used to generate the revenue from company's core business activities. Now, what are going to be operating assets for me? So cash, stock, building, machinery, equipment, patents, copyright and goodwill, right? All of these are important for me to conduct my business. Now I would like to clarify one more thing over here. What is that one more thing? So clearly see over here, talking about patents, copyright, goodwill, etc., right? These are all fine, but when we will talk in cash flow, this building, machinery, this will be taken in investing activity, right? So please understand the difference over here. What I want to make you understand, just see this. So right now we are dividing your assets into two types. What are this? Operating and non-operating, right? But when we will be talking about cash flow, in cash flow we will be dividing the activities in three parts, right? So there we'll be talking about operating activities, investing activities and financing activities. I would not like to I do not want to create doubt in your mind. So whatever I am telling, please understand. As of now, we will be talking about cash flow when we will start taking the lessons on cash flow, right? Right now we'll not be talking. Just I have told you that in cash flow, any activity of business is divided into three parts, right? There are three categorizations and we divide on the basis of that. This is only piece of information that you have to understand at this particular moment of time. Okay, now having said that, now move on to the operating assets and non-operating assets. So for accounts purpose, for basics purpose, we have just divided into two parts: the assets which are used in the business, right, that are giving us revenue, right, that are related to the core business activity. So for example, yesterday also I have said, suppose I have the business of manufacturing of medicines. So any asset that is involved in this particular process, right, that is helpful for me to conduct my this business, that will be taken as a operating asset for me. Whereas when I talk about the non-operating asset means these are the assets that are not required for daily business operations, but they can still generate revenue. They generate revenue for me, but they are not required for my daily business operations. For example, suppose I have purchased shares of Reliance, right? My business has invested in the shares of Reliance. अब मेरा business तो medicines का है, right? My business is of medicines, but I have invested into shares of Reliance, correct? So what it is going to lead to, that will be considered as a non-operating assets. ठीक है? What are the examples? So short-term investments, marketable securities, vacant land, interest income from fixed deposit. Yesterday I also have given you the example of a residential flat, right? So if a business has invested in a residential flat, obviously residential flat is of no use in the business. Manufacturing of medicines, no use of residential flat. Hence that will be considered as what? That will be considered as an non-operating asset. Vacant land, your business has taken a vacant land. Now what you are going to do in a vacant land? No use. You just have invested into that in form of a property, right? So such kind of asset is of no use for us. Okay? Now moving ahead, talking about liabilities. So liabilities, these are obligations or debts that an enterprise has to pay at some time in future. कभी ना कभी तो pay करना है. I don't think I have to make you understand the meaning of liability. We all understand when we borrow something from someone and we have to pay it back, that is called as the liability. Now liabilities can also be divided into various parameters. First of all, if I want to divide the liabilities on the basis of time, right? So there are few liabilities which are short term and there are also liabilities which are long term. ठीक है? So we call them as current liabilities and non-current liabilities. ठीक? So this is what has been told over here. Liabilities are obligations or debts that an enterprise has to pay at some time in future. They represent the creditor's claim on the firm's asset. Fine. So this is the example. For example, this has been example has been shown to you. Suppose for your business, it is so common to take bank loan, right? So if you have a business, you do not have enough sufficient funds, what you do, you take a bank loan, right? You take limits from the bank, overdraft limit or cash credit limit, etc., etc. What are all these? These are all a form of loan that you take from the bank. ठीक है? So liabilities are classified as current, non-current and contingent. ठीक? So what do we mean by current liabilities? Current liabilities are those liabilities which we need to pay within a period of 1 year. ऐसी liabilities जो आपको एक साल के अंदर अंदर pay करनी पड़ेंगी. Let's see what are those liabilities. So we have accounts payable, interest payable, income tax payable, bills payable, bank account overdrafts, accrued expenses, short term loans. So I'll make you understand few out of this. First of all, what is accounts payable? Accounts payable, also called as the trade payables, also called as creditors. You can call anything that you want. These are all the different names of the accounts payable. What does it mean by accounts payable? I am manufacturing medicines in my company, right? Now फॉर मैन्युफैक्चरिंग मेडिसिन व्हाट आई नीड रॉ मटेरियल, ठीक है, कुछ सामान तो चाहिए, बनाऊंगी किस चीज से, तो अब वो सामान भी मैं खुद थोड़ी बनाऊंगी, आई नीड सप्लायर, रॉ मटेरियल सप्लायर, राइट? सो द फ्रॉम द पर्सन फ्रॉम होम आई एम purchasing ingredients for the manufacturing, that person is called as the supplier. Now whenever you purchase anything, you have got two options: either you can pay in cash or you can pay in credit, right? Means pay in credit means you have not paid anything and you have said that I am going to pay after 1 month, after 2 months, like that. Most of the business transactions, they happen on credit. Fine. So this is what, obviously you are going to pay after 2 months, but today you have to recognize the liability into your books. ठीक है, आज आपको रिकॉर्ड करना पड़ेगा. Yesterday I was mentioning a principle, right? Principle of prudence. So accounting principles, that also we will have a look upon, although they are not directly given into your course. See, there is no issue from my end, it must be buffering at your end. So what was I was telling? Yeah, trade payables, I forgot what I was saying. Yes, so it happens on credit basis. Yes, I was telling about the principle of prudence, right? Yes. So there are many basic principles of accounting on the basis of which accounting is run. Fine. So one such principle is called as principle of prudence. ठीक है? Although we will be talking about such principles as well, not much in detail, but yes, a little bit of understanding. Prudence principle says that if in a upcoming future you can see that there is some liability, so you should recognize that liability into your books. For example, you can foresee that after 2 months you have to pay the supplier, although you have although you have although you didn't have to pay them right now, okay, but still what you have to do is you have to record that particular liability into your books of accounts. This has been told by principle of प्रूडेंस, राइट? प्रिंसिपल ऑफ प्रूडेंस ये कहता है कि आगे आने वाले फ्यूचर में अगर आपको कोई लाइबिलिटी दिखाई पड़ रही है या कोई खर्चा दिखाई पड़ रहा है तो आप उसको रिकॉर्ड कर लीजिए, ठीक है? क्या आपको आने वाली इनकम भी रिकॉर्ड कर लेनी चाहिए? सो प्रूडेंस का प्रिंसिपल कहता है नहीं. This principle applies only on to the liabilities and expenses. I repeat myself in English. So the principle of prudence says that you should be cautious and you should record all the upcoming liabilities or expenses which you can foresee. So liability, I have recognized that I need to pay, fine, and in that particular case, what do we mean to say by this? In case of expenses, we make the provision, right? We make provisions, fine. So I hope the principle of prudence is clear to everyone. ठीक है? Now let's move ahead and talk about accrued expenses. Accrued expenses means the expenses which have been incurred, right? Like for example, I'll give you the example over here. In my factory, there are 2 workers who are working, right? There are workers who are working, fine. So the month of April has already ended, okay? I have to pay them salaries, but I have not paid it yet. I have to pay, but I have not paid it yet. So what I will call that as? I will call it as outstanding expenses. I will call it as outstanding expenses. ठीक है? Also known as accrued expenses. Right? Accrued. So accrued income means income that has been earned but not yet received. Fine. I repeat myself, accrued income means the income that has been earned but not yet received. Similarly, accrued expenses means the expense which has been incurred but not yet paid. मतलब खर्चा तो हो गया है बट अभी आपने पे नहीं किया. फॉर एग्जाम्पल द सैलरीज ऑफ वर्कर्स, राइट? Workers salaries is one such component. So if the month has already ended, now the salary is outstanding, so you have to pay for it. You have not paid in cash, that is why you will write the accrued expenses. Apart from that, what else is there that can make you confused? So bills payable. Do you guys understand about bills payable? Provisioning in banks against loan, yes. So in banks it is understood, see, for bank loan is an asset. So if you can foresee that this particular borrower will not be able to pay me back, then in that particular case you can see that there is a expense going to it is going to come to you in future. So what do? You record a provision for that. You already consider that this is a loss which is going to happen to me, therefore you maintain a provision for that. This is where the prudence concept comes into the picture, right? Salary is an accrued income? No, salary is not an accrued income. Accrued income, for example, suppose you have a manufacturing business, right? You also have invested in a flat, right? In that particular flat, tenants are there. Month has already been completed and now you will receive rent. Rent is your income, but you have not received it till now. ठीक है, आपको मिला नहीं है अभी तक. Correct? So this is why it will be called as accrued income. Any income for the business which has not been received, it will be called as the accrued income. Already earned but not received. Fine. So suppose like no, suppose I am teaching you, right? So for whole month I am teaching you, correct? Services I have already provided you, but have I got my payment till suppose for example I have not got it and the whole month has expired. Fine. So what I will record it as? I will record it as accrued income. Income which I have earned but not yet received in cash. So I hope you must have got the answer. Fine. Bills payable. See, so this bills payable and bills receivable. Bills receivable is a current asset, right? And bills payable is the current liability. Now what are these bills? We call them as bills of exchange. They are nothing, although there is a difference between bills of exchange and promissory notes, right? But what do we, for making you understand, just understand this. Suppose there are two persons. Now I am explaining it once for all and I want all of your attentions to be here in order to understand the bills of exchange, right? So there is person A and here is person B, right? Person B, he is manufacturer of biscuits. Now for manufacturing biscuits, he needs sugar, right? So Mr. A is a supplier of sugar. So in this particular case, Mr. A has supplied goods supplied goods, right? And what Mr. B has done? Mr. B should have made the payment, but he has not paid it. Fine. So bills of exchange is what? Mr. A, who is a supplier in this particular case, he will instruct Mr. B to pay the price for the goods within 2 months. 2 months, 3 months, or whatever the case may be. So what I mean to say over here is, Mr. A, who is a supplier, he will instruct Mr. B to pay the payment within a specified time limit. Now in this particular case, Mr. A is the supplier, right? So the bill he has raised, it will be called as bills receivable for him, because उसको तो पैसा मिलने वाला है. He is going to receive the money. Therefore, this bill will be bills receivable for him, and Mr. B, who has to make the payment, for him it will be called as bills payable. Right? For him it will be called as bills payable, because he has to make the payment, he will receive the payment. Who is going to raise this particular bill? Mr. A, who is the supplier, he will say to Mr. B that please make this payment to me within 2 months, 3 months, or whatever the time may be. Right? A time will be specified, and B will give his consent कि okay fine, I am accepting this bill and I will pay you the specified sum after 2 months. ठीक है? So अभी सबको clear है bills of exchange? Account and bills receivable means? Accounts receivable and bills receivable. I guess you want to say like that, right? Accounts receivable and bills receivable. So the another name for accounts receivable is debtors, right? In case of debtors, such kind of bill has not been made. No bill is there, right? The person has come, he has taken the goods, right? And he has said that okay, I will pay the money within 45 days. There is no such thing like bills of exchange existing between. If there is no bill of exchange between a supplier and debtor, then that will be called just we will record it as debtors only. Fine. But if there has been a promise made in form of bills of exchange, then that will be recorded as bills receivable. Fine. So A will record as bills receivable and B will record as bills payable. ठीक है? It is fine. You can watch it later on YouTube as well. So have we understood all the topics mentioned here? Anything else that you consider you are not able to understand that? So I hope bills of exchange is also clear to everyone. ठीक है, चलिए. तो अब मैं आपको एक और चीज बता देती हूँ यहाँ पे. So current liabilities, they are a key component in computing various liquidity measures, right? Although we are going to talk about this when we will read ratios, right? Ratio is also one such thing that you guys have to cover. Fine. But let me tell you one thing. You have understood current assets. You have understood current liabilities, right? So when we deduct current liabilities from current assets, what we get as working capital? क्या मिलता है हमें? Working capital. So understand, for example, suppose I have 40,000 worth of current assets with me, right? And I have to pay 10,000 in form of current liabilities. Obviously, in a short term, I have to pay such current liabilities. So that means how much amount I have in my hand to do my business. This is called as the working capital. कितना पैसा है आपके पास में आपका बिजनेस करने के लिए. So current assets less current liabilities is equals to 30,000. That means your working capital. Fine. There are so many ratios also that we calculate, but I'll not talk about them over here. because anyways we are going to cover this when we'll be talking about the ratios. Okay, so just a quick look: current ratio, quick ratio, cash ratio, all of these we'll be talking about in the lecture of ratios. So here I am skipping it over here. Non-current long-term liabilities, let's understand. Non-current or long-term liabilities, also called as, they are the debts and obligations that are due beyond 1 year. Long-term liabilities are an important part of companies' long-term financing. Companies take on long-term debt to acquire immediate capital to fund the purchase of capital assets or invest in new capital projects. Fine. It is always better. I do not know whether you guys have heard about the asset liabilities mismatch or not. Fine. So this was a problem recently, not recently, but 2-3 years back. This was a major problem in the non-banking finance companies as well as in banking sector. This is the major problem that we witness. What is the problem? So when banks have short-term funds मतलब क्या? सपोज मैंने आज किसी से 10,000 रुपए लिए और कल वो पर्सन आ जाए मुझसे वापस पैसे मांगने के लिए, that will be considered as short term fund. If today I have borrowed 10,000 rupees from a person, and if tomorrow that person comes and he says that please give me back my money, so such fund will be called as short term funds. Understanding my point? If I have 10,000 rupees, which is a short term fund, I do not know that the person can come at any time asking me back his money, right? And I invest such funds in the long term assets. Long term asset means the asset which will fetch me revenue in the long term. ऐसी asset जो मुझे लंबे समय में पैसा कमा के देगी, तुरंत तो नहीं देने वाली. This asset will not give me the revenue in the immediate future. This will take a long amount of time to fetch me revenue. So what will happen in such case? This is a recipe for disaster, right? You have funds for short term period and you are investing it into long term asset. This is called as the, so this is a prominent problem, right, that we have in our financing sector. So it is always good that you should have long term funds to finance long term assets, right? So this is what has been said over here. So this is what this line means, that companies take long term debt to acquire immediate capital to fund the purchase of capital assets or invest in the new capital projects. Capital assets means long term assets, the assets which are going to give you revenue in long term, right? So if you want to fund such kind of assets, you should use long term funds, and long term fund means long term liabilities, right? Yes, correct. So let's understand what are the list of non-current liabilities that we have. So this is bonds payable, bank loan, loan from financial institution, debentures, right? Bank loan. See, what is the difference between bank overdraft, and bank loan? First of all, bank overdraft we have seen where? We have seen in current liabilities. So for a business, bank overdraft is a current liability, bank loan is a long term liability. Number one thing. Number two, both are liabilities. ठीक है, एक short term है, एक long term है. Now what is the difference? So bank overdraft is for a short term period. It is like this, please understand. So I'll tell you practical example. Suppose I have a trading concern, ठीक है, I have stock. So what I will do, my bank will open a cash credit account for me, also called as CC limit, that they will grant me. What will happen in that particular CC limit? Suppose a 30 lakhs limit has been granted to me. Similar like a credit card, right? In a credit card, you have been granted a limit. ठीक? Now, if you want to spend, you can spend. Suppose I spent 1 lakh rupees in the current month, right? So I know that by the end of the month, I will receive a bill and I have to pay it bank. So similar is the case with the bank overdraft. Overdraft means they are allowing you to withdraw in excess. आपके अकाउंट में उतना पैसा नहीं है जितना वो आपको निकालने की इजाजत दे रहे हैं. That means your account doesn't have that much balance, at that much they are allowing you to withdraw. So that is called as bank overdraft. Obviously this is not done for free, they obviously charge a fee for that. ठीक है? So this is what the difference. OD is a type of you can say liability, but you know that this liability you will have to pay in a short period of time. ठीक है? So this was the difference. Debentures and bonds, you understand, so they are given for a long term period. Fine. So debentures and bonds, these are the kind of loans. Suppose I have a company and my company has issued debentures. Okay? So I am saying to the investors that, dear investors, please give me money for 10 years, right? Please give me money for 10 years, and in these 10 years every 6 months I am going to pay you interest. So हर 6 महीने में मैं आपको इंटरेस्ट पे करता रहूंगा और अभी आप मुझे पैसे दे दीजिए. जब 10 साल पूरे हो जाएंगे तब मैं आपका पैसा वापस लौटा दूंगा. Right? So in case of debentures, you take the money for 10 years, you pay half yearly or yearly interest, whatever has been agreed, and at the time of maturity, that means at the end of 10 years, you return the money back to the investors, right? So this is also what? This is also liability. Fine, let's move ahead. Wait for a second. So now we have a mortgage payable is also a liability of a property owner to pay a loan that is secured by a property. So you have to take a loan, right? And in order to secure that particular loan, you have given your property for that, right? So this will be considered as what? This will be considered as a mortgage payable, the amount of loan that you need to pay. Okay, is it clear? Now talking about the contingent liability. Contingent liability means a liability which for which we are not sure as of now, right? But that can occur. There is a probability that can occur. Now I will have an example over here, fine, and this will make you clear. So number one example is, this example is not for contingent liabilities, but this I am giving you just to clear the concept. Just wait for a second. Yeah. So contingent liabilities, they are the sorry, I was supposed to give you example. So suppose there is a person, Mr. A. Mr. A is a worker in my factory. He is a worker in my factory. His salary is due for the month of January, February and March. 3 months salary is due. We have not paid the salary to him. So this particular liability, this will be considered as current liability. What this will be called as the current liability. Why? Please listen to me very, very carefully. Mr. A has worked for me in all these 3 months, right? I have to pay him salary. Yes. Is there any doubt regarding that? No. There is no doubt. I am 100% sure that I have to pay off this particular liability. So I will call it as a current liability. ठीक है? So this example I have provided you so that you do not get confused in matter of contingent liability. Contingent liability में क्या होता है? There is a what you can say, doubt, right? You have a doubt whether you will have to pay this liability or not, and such kind of doubts, they arise in the lawsuits as well as the product warranties. First of all, let's take the example of the product warranties, right? So in case of product warranties, suppose I have sold a washing machine. In that washing machine, my company has guaranteed a 10 years period warranty. Fine. So now I do not know whether the washing machine will have any sort of problem or not. There is a doubt, right? I do not know whether this washing machine will come to me for repairs or not. I do not have an idea about it, because this is what you can say, this is doubtful. It might happen that the washing machine is running continuously for 10 years and there is no product defect. And this also might happen that the washing machine is coming to me every year for product warranties, right? So both the cases are there. Next is lawsuits. Lawsuits means the court cases. So in case of court case, you are not aware that whether you will win the case or you will lose the case. You do not know the probabilities as of now, right? So this is called as the contingent liability. So contingent liabilities, these are the liabilities that may occur depending on the outcome of a future event. Right now you are not sure about the liabilities because such liabilities might occur in the future. For example, when a company is facing a lawsuit of INR 1 lakh, the company would incur a liability if lawsuit proves successful. So the use of if has come over here. You might win the case, you might lose the case, right? So this is what contingent liability is. Now can someone tell me what should be the treatment of contingent liability in my books of accounts? How should I treat this particular contingent liability in the books of accounts? बताइए. Yes, so anything that involves a iota of doubt, it is considered as a contingent liability. Like you have mentioned the bank guarantees and letter of credits, the guarantees the people give, yes, they are considered it as like this. Now I am asking that what should be the treatment of contingent liability in my books of accounts? Shall I record contingent liabilities? Option number 1. Option number 2, shall I create the provision of contingent liabilities, or you can give me any answer as per your understanding as well. Okay, what about others? So let me tell you without wasting any further time, both the options are wrong. ठीक है? Neither it will be recorded in the books of accounts nor any provision will be made in the books of accounts. Why should I create a provision? See, by creating the provision, I am reducing my profits. Okay? And as of now, this is not established whether I will have to pay contingent liability or not. That is why there is an prescribed way provided for it. What is that prescribed way? So whenever you create the balance sheet, suppose this is my balance sheet, छोटू सी balance sheet, it has been created, right? And now below this balance sheet, what I am going to write is note. And here I will mention contingent liabilities. Right? So here I will mention my contingent liabilities. Is it clear? So whenever if any option comes, contingent liabilities, they are recorded in the notes to accounts. Notes to accounts means they are not reflected in the balance sheet or your profit and loss account. They are shown as a footnote. बस कि जो पढ़े इंसान उसको पता रहे कि हाँ भैया इस बिजनेस के ऊपर कुछ कॉन्टिंजेंट लाइबिलिटीज भी हैं, राइट? So this is made in order to tell the person, the stakeholders who are seeing the financial statements that yes, this business is having the contingent liabilities. So one more thing I would like to tell everyone over here. So most majority of my class I'll be using English, right? But wherever I feel that the concept is a little bit tricky, I might use a little bit Hindi as well, but it will be followed by English translation for all those who are not very much comfortable in Hindi. ठीक है? Off balance sheet items, no dear, the off balance sheet items is something else, right? So we are talking about in the sense of governments. In sense of governments, off balance sheet items means suppose the government has not taken the loan directly, but it has told its public sector undertaking to take the loan. So the liability indirectly belongs to the government, but it is not getting reflected in the balance sheet. That is a separate thing, off balance sheet items. So that is an indirect way of financing, right? Here what I am telling is footnotes are always considered part of balance sheet. इनको हमेशा part of balance sheet कहा जाता है, इसलिए I cannot say that they are off balance sheet items because that is considered in a different connotation. ठीक है? चलो अब आगे बढ़ते हैं and let's talk about owners fund. So we have talked everything about the contingent liabilities. I hope that you all are aware about meaning, usage as well as where to display that. ठीक है? So what is the difference? Now let's understand the owner's fund. Owner's fund is the excess of aggregate assets of an enterprise over its aggregate liabilities. So yesterday only we have seen the formula. What was the formula? Assets is equals to liabilities plus capital. Capital is also called as the owner's fund. Capital means what? The money that owner has brought, right? So whenever, if sometime I have to calculate the capital, I will shift the liability over here and what it will be called as asset minus liability is equals to capital. ठीक? Now there are few things that have been provided. Owners fund are provided by the owners to the business and they are known as the capital in case of sole proprietorship, right? So in case of sole proprietorship we call it as a capital. For partnership also we call them as capital, right? It is called as share capital in case of incorporated bodies like the companies or cooperative societies, right? So for such kind of bodies we call the owners fund as a share capital and for other bodies we call them just as capital. So this is the thing. Now next thing, what do we include in the owners fund? So first of all, I'll tell you one thing. Let's understand this one by one. So this is your business, right? And this is the owner. Now, one more thing. Whenever we see the balance sheet, in the balance sheet, there is a column. Here we write assets, right? And here we write capital and liabilities. Now, one more thing I would like to ask you. Fine. Why do we write capital along with the liability? What is the idea behind this? Why do we write the capital along with liabilities? So the idea behind this is that business की identity, the identity of business is separate from the identity of owner. Identity of business is separate from the identity of owner. In case of company, we consider that a company is having a separate legal existence apart from its owner, right? So for all such doubts, issued, subscribed, paid up capital, When we will come across on the company format, we will talk it over there, right? Right now we are just talking about the basics of accounting, so this does not applies over here. When I will discuss the formats of balance sheet and P&L, at that particular day I will discuss all such concepts with you. Okay? Okay, so let me focus it over here. Business and owner, they have a separate identity, right? So when owner gives the capital to the business, when owner gives the capital to the business considers it as a form of liability, right? Business considers it as a form of liability, and hence it is written alongside liability. So for business, it is a form of liability which business will return once the business closes down, right? So business will return this particular liability, that means capital, if business will shut down. Okay? Yes, so as of now, just understand this. Now, if you have understood this, now let me introduce to another thing. That another thing is, just listen to me. So this is done, right? Owner has given the capital. Now business has earned some amount. See, business has earned some amount. So business will say that, dear owner, I have earned this particular amount because of you. So therefore this profit belongs to you. Profit has been earned because of the capital employed. After that, owner says that I also have to withdraw some amount for my personal expenses, right? So in case of companies, or in case of proprietorship, mostly happens in case of, we use this particular term in case of proprietorship, right? So if a owner withdraws some fund for his personal expenses. Now what are personal expenses? That are not connected with the business. For example, the school fees of his children. So that is called as personal expenses, and such things will be withdrawn from the capital, and we call them as drawings. Yes, very good. So now finally, when I will be preparing my balance sheet, ये सारी चीजें एक ही साथ बता दी मैंने, because that will come again and again and I'll have to explain anything. Good. So anything withdrawn from the business but for personal use is called as the drawings, right? Used in case of sole proprietorship, partnership, like that. Fine. So in whenever the balance sheet will be prepared for a sole proprietorship firm, or let's say partnership firm, first they will write capital. Business will say that, dear owner, you brought in 1 lakh rupees. Owner will say yes. Then business will say that in the current year we have earned a profit of 50,000. So let's add it over here, because we will give this profit of 50,000 to you. But then owner, your business will say that, dear owner, you have also withdrawn 10,000 rupees for the school fee of your child. So I am going to deduct it. So finally, the amount that you have invested in this particular business is 1 lakh plus 50,000 less 10,000, that is 1,40,000, right? So the capital will appear in the books of accounts at 1,40,000. See, means of giving means business will add the profit in the capital of owner. Now it depends on the owner that how much amount he wants to take out of the business, right? So business has given everything to the owner. 50,000 is what business has earned, and he has given everything to the owner by adding it over here. Now it's up to the owner what he withdraws out of it. If owner withdraws whole profit, then less 50,000 will happen and capital will remain same. If owner withdraws just 40,000, then the capital will become 1,10,000. ठीक है भाई, ये liability side ही तो है. When I am saying that profit should be in the liability side, I am not saying that it will be added in the liabilities only. Capital is also written in the liability side of the business balance sheet. This is your balance sheet. This is called as asset side and this is called as liability side, right? Okay. So this is how profit is represented. If anything you were confused about it, so this is how profit, your balance sheet is represented: capital plus profit less drawings, and then your long-term liabilities will come over here, and your current liabilities will also come over here. And please do not argue with me. This kind of format is applicable sole proprietorship, partnership. In the company, we will see new kind of format, right? Chaliye, so this I have explained. Let me take a few questions. So, as it is money of owner, so it will act as a liability for business. Yes. So, everything belongs to the owner, right? Capital, the amount earned during the year. So, that is why it is written over in this particular side. So, in a balance sheet, we call this side as an asset side, this side as a liability side, right? It will come up to you. Just wait for a second. Just don't take heavy onto your head. Just understand that in a balance sheet of a business, whatever amount has been contributed by the owner, it will be represented 1 lakh rupees. ठीक है? Any profit that has been earned during the year, it will be written over here, adding in the capital. Any amount that has been withdrawn by the owner, it will be deducted in form of drawings, right? If owner is using any amount for personal purposes, then that is called as the drawings. And finally, we have a final capital figure 1,40,000, and this capital figure belongs to whom? This belongs to owner, right? So if one day this business gets shut down, then the whole 140,000 rupees will be returned to the owner. ठीक है? ठीक? Now I hope you all have understood this. Obviously this video is going to be available in YouTube, so you can watch at any time you like, right? And also please watch it again for those who are not able to understand, right? I am very sure that if you will watch it again, you will be able to understand. Now next thing is provision. What is provision? So provision means any amount retained by way of providing for any known liability which cannot be determined with substantial accuracy. That means you know that this is going to happen. You are very sure about it, but you do not know the quantum of this. For example, suppose debtors, right? So for debtors, every year I am seeing that if my debtors are for 1 lakh rupees, I am witnessing 5 to 10% bad debts. Bad debts means 5 से 10% अमाउंट मुझे नहीं मिलता हर साल, इतना पैसा हर साल डूब जाता है. 5 to 10% of the amount that I have to recover from my debtors, it goes into loss every year, but because the people do not pay to me. So based on my previous experience, I know that 5% is going to be the bad debts. I do not know that what is going to be the actual bad debts, but I know I have an estimate. So on the basis of that, I create provision for doubtful debts. This is the same provision your banks also make. So banks have given loans, and bank understand that on the basis of an estimate that this much amount in every asset is going to be a loss. So they make a provision for it, right? So this is called as provisioning. you 100% know that there is going to be a liability. So this is the difference between this and contingent liability. Contingent liability mein you have a doubt. In contingent liability you have a doubt, but in provision you do not have any sort of doubt. You know that liability is going to be there, but you are not aware about the exact amount. Fine. So you make an estimate for that. So this is it that I want to discuss today. Thank you so much for joining in. I hope you did understand the lecture. If some parts of the lecture were not that much clear to you, I will request that please watch it once again. Fine, you will be able to understand. Okay. So this is it. Don't forget to like this video and thank you for joining in.